Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Sell-off in the Indian markets intensifies as the Nifty slips below the 11,000 mark on the weekly options expiry day. All sectoral indices trade with losses. The street is unimpressed by Zee's stake sale deal with Invesco Oppenheimer Fund as the counter slumps more than 4% in trade today. Nifty Metal is top sectoral loser with its two top constituents, Hindalco and Vedanta, which are the top laggards on the index today. And auto sales failed to turn around in the month of July. Maruti Suzuki posts its largest monthly sales decline since 2012. Seasonal weakness and credit crunch hurt Escorts, M&M and Bajaj Auto too. Good afternoon, Neeraj. Well, the selling pressure is actually intensified. Yesterday, we just breached the mark, but today, for majority of the session, we've traded below the 11,000 mark.
Yeah, and it's actually worsening in the last few minutes. Navneet, as you can see, the Nifty is trading at the low point of the day. The Bank Nifty is down almost 2%. Very pertinent to get a couple of market voices going ASAP. But just look at the way and the ferocity with which the last 15 minutes the Nifty Bank is corrected. 565 points lower for the Nifty Bank. While we'll get the market breadth going, before the heat map, I would also want to look at the Nifty Bank MRR because frankly that's the banking stocks which are really putting pressure on the market. So look at this market breadth, about 1:4 or 1:3, slightly more than 1:3 in favor of the declines, and it's been almost a one-way move throughout the trading day today, so hardly any solace. And look at this is what's hurting. State Bank of India is down 4%. Already beaten down RBL down another 3%, but the heavyweights include a Kotak Bank which is down 2%, ICICI and Indus are down, HDFC Bank down about 1.25%. All members of the Nifty Bank are in the red, and that speaks something about the kind of mood that market seems to be in. Now, I'm guessing these are all well-owned names which are all getting sold out. So banks clearly putting the pressure. And now let's get the heat map going. There should be very few winners, if at all. Maybe an odd Wipro, which has started off well, might still be doing okay, but hardly any gainers. So Bharti Infra, Wipro, Power Grid, a bit of a defensive bent, and maybe Maruti's, well, we have to don't quite give credence to these moves. It's been beaten down so much. But look at the losers. Commodities being taken to the cleaners. So Vedanta, Hindalco, JSW Steel, all three down. A bit of a global flavor out here. Dollar strengthening, commodities across the board weakening. So you have this fall here. And autos, Tata Motors down 4.5% in the session today. Zee Entertainment, another 4.5% after 5% downtick yesterday. Larsen & Toubro is down about 2.5%. Essentially, almost everything is down. Just a very quick sneak into what the mid caps and the small caps have done as well. Large caps are getting clobbered any which ways, but the mid caps and the small caps must be no different. And the MRR function should come up on your screen for what's happening in the mid cap index, down about 1.4%. And the falls are pretty steep out here as well, with Dish correcting, but the others too, Ramco Cements, Pfizer, REC, Mahindra and Mahindra Financial Services, all of them being down. The top gainer and the one which is kind of standing out is Ajanta Pharma. Aside of that, we don't really have very strong gains at the broader end of the spectrum. Maybe real estate is trying to hold out with Prestige and Oberoi doing okay. And the small cap space too must be colored with a bit of red. I mean, Care Ratings is down 18%. Those abysmal numbers that Care Ratings came out with, my God, and that stock is getting punished. Delta Corp down 6%. Yesterday's gains being completely moved away, and Lemon Tree and a few other good names as well getting corrected. Navneet, it's just looking a very ominous picture.
That's right, Neeraj. In fact, even if you look at the more liquid universe, the futures and options market, the cues are just about subdued. So in the morning, actually, there was a lot of build-up which came in for the Bank Nifty futures. But as you can see on your screen now, the Nifty futures have also picked up momentum. The open interest is up about 14%. The premium, I believe, from yesterday's closing of 14 has gone up to 28 points. And Bank Nifty, which is down 2%, it's been a while you see this open interest increase of about 30% coming in on futures, clearly telling you at even lower levels now, fresh short positions are being taken for Bank Nifty futures. I believe for the Bank Nifty, the 200-day moving average will remain key because we were defending that mark for the longest time. But moving ahead with regard to the volatility, which is inched higher this week and substantially, India VIX is up about 20% for the week now and currently at levels of 14.6, up about 8% in trade. It is the day for the weekly options expiry. We didn't get good cues from the global market. markets, and back home, of course, we were battling with our own issues. And today, where you could have expected more volatility, which has already come in the first half of the session, markets already corrected 170 points in trade. And if you go by the options data, it's clearly telling you now on the downside, at least for today's expiry, you can watch out for the 10,900 mark. And for majority of the day today, we've traded below the 11,000 mark. So that's clearly not a great sign going ahead. With regard to stock futures, I do have certain stocks which are doing well. So Ujjivan Financial, this one comes out with its earnings tomorrow. So ahead of that, there is some strength which is coming for the second straight day, though the stock's been trading below its 200-day moving average. So good going for Ujjivan Financial. 7% higher in a weak market like today's tells you maybe there's something coming in the earnings tomorrow, but we'll have to wait and watch. 13% higher for the futures. The other one which I've been observing is Voltas, clearly on the trends you've seen on the open interest side. Yesterday we saw long positions. Today also the open interest has surged quite significantly, and the stock too is up about 3% in trade. So on the future side, longs are being taken, but even look at that, 34% higher in terms of OI increase for the futures. But even if you look at the cash data, the volumes are pretty much on the higher side. The white line is projecting today's volume vis-a-vis the average volume that we've seen for Voltas in the last 20 days. So there is buying coming in on both on the cash side and long positions on the future side. And UPL, a weak operating performance in Q1. The stock's been trading now near its 200-day moving average. I don't think it's breached till now, but it's trading very close to that mark. And because of that weak operating performance, the stock's down 3.5%. Short positions seen as the open interest has surged about 18%. So not great at all, Neeraj, because now is the time. I don't think we've seen any major build-up on the future side in the last many trading sessions.
Yeah, we're talking about we being light as well, and despite all of that, so the correction is just very severe and ongoing. By the way, just before we get to our very special market guest, CET numbers are out. Remember yesterday Apollo Tyres 2 reacted reasonably positively to its numbers. On a market like this, CET is holding out because the net profit numbers are better than what the street was working with. Otherwise, too hasn't corrected too much, but these stocks have corrected quite a bit over the last few days, but the numbers seem to be better. Let's wait and watch if this holds out. The net profit number at least higher than what the Bloomberg consensus estimate was. Not a bad sign. But the market's by and large bleeding. Let's welcome a very special market voice, Rajiv Bagla of OPC Asset Solutions, joins us right now on the show. Mr. Bagla, thanks so much for taking the time out and being with us. Now, map it down for us. Thus far, we've corrected because our own problems. In all probability today too, our own issues haven't gone away. Just that the world is also not playing spoil sport. World is also playing spoil sport. How worse can this situation get? Do you, in your wisdom, believe that when people were making a mockery of a level of 10,500, that could now very well be possible because the globe isn't quite a happy place these days?
Yeah, I hope not. I would start with that. I think this is more a lack of hope actually that is taking our markets downwards. There's very little policy intervention. If you see, we have corrected about 1,100, 1,200 points from the high of the Nifty, and there's been nobody really addressing it. We saw a budget which was very pedestrian. The issues with NBFC, the exposure of NBFCs to banks and to mutual funds, how will that get tackled? Nobody's really given any any intervention on that. I think those are the big issues in a slowing economy where rates are still very high and policy is really lacking in terms of detail, in terms of comprehensiveness. Anybody out to address it? That is the biggest issue. Underlying issues like earnings, we have seen. We have had 5 years of earnings disappointing. We still managed to, take the market to 12,000, and we had flows coming in. If China gets $85 billion in a market which, there are more than 50 companies which are emerging satyams, $4-5 billion of overstated deposits have come in, huge companies, and they've got $85 billion this year. We got 10 billion, we've lost to 2 billion in July itself. That is what I think, and we are seeing very pat remarks both by regulators and the government. I think that's what's spooking the market, if you ask me. Globally, we'll be okay. Yesterday it's only because he said this is mid-policy adjustment. That will get digested today. There's no problem there. And they have to tackle the dollar strength issue. So sooner or later you will see Fed coming back again. So that will get digested. Globally, there is a little slowdown, but there's a huge stimulus against that. So you're looking at 2-3 years of very good global markets. The recession has probably got postponed because of this Fed move and the stimulus.
So the globe is not a problem?
Globe is not a problem. India is the bigger problem, and Indian policy making, if you ask me, is the biggest problem.
So Samir Arora, in an interaction with us, said that the market sentiment might turn if the market believes that somebody in Delhi is beginning to listen, even if it may not act. Do you believe that is the issue, or the fact that almost every economic and earnings indicator that is coming out is an issue? We may harp till the cows come home about the FPI taxation, but the fact remains that the underlying itself is not looking all that strong. Yesterday core data is abysmal.
It's abysmal, and the sentiment, if you look at domestic sentiment, it's at multi-year lows. So nobody's going to put on fresh capacity. People are postponing expenditures. So I would totally agree with Samir, and my issue is I have tried through various channels to get a feel, that okay, what is the policy thinking? You have, in the parliament, the finance minister says you don't pay CSR, I'm going to put you away in jail for 3 years. What are we talking here? First you made charity compulsory, then you say if you don't do that, I'll wait for 3 years, or I'll wait 3 years and then you go to jail for 3 years. What are we talking? Look at how the US system works, even the British system. You find the person, whatever you want to do, you take them away from the market. You don't put people in jail. Now you have auditors who are charge-sheeted in criminal cases. You have rating agencies in trouble, independent directors. Nobody wants to be an independent director, Neeraj. Every week I am getting offers, and I'll say it's too big. If the company has any exposure to a bank, I just walk away. I said, so that leaves, a very small subset of technology companies where you can be an independent director. Who wants, after 30 years of working in this market and take a risk of going to jail for something you don't even have oversight? And, the pronouncements are so arrogant. They are so, dismissive of the industry overall. And markets you leave aside. Markets, I think they want that the market should be finished out. Hasmukh Adia last year said, 40,000 crores will raise in capital gains tax. I want him to come back. He's now chairman of Bank of Baroda. He should come and address what happened. What a foolish move that was. Now FPI tax, Neeraj, I have spoken to from top lawyers to top, the big four, 2 of them, trying to figure out. I have a couple of companies who asked me this question, who are trust-based. The sovereign wealth fund can't do anything. A lot of people are mandated by their regulator to be a trust structure. What is the structure in a corporate? How do you convert? What will happen to your existing shares? Nobody has an answer. You just put in a thing, and the most hilarious part is the finance minister says, if you have an issue, convert to corporate. Do you understand what it takes? How will I transfer those shares? Second, how will someone subscribe in a corporate thing? Will I issue equity? Will I issue pref? Will I issue it as debt? Will I issue it as optionally convertible, which you don't allow? Will I issue it as compulsorily convertible? How will my investors come in and go out? Second, every clerk sitting in MCA will be selling my database. He will know Neeraj has invested in your fund. Everyone will know exactly how much, who's holding in your fund. There are so many issues in launching this. Same like sovereign bond.
Sure.
We said good, if Argentina can raise money at 7%, today Greece is raising 10-year money on the same rate as US.
Yeah, but they don't have a choice, right? Their risk-free rate is negative or zero.
It's negative,
they don't
but
have a choice.
Still, to a defaulting basket case, you're giving money at 2%.
Okay.
I would say sovereign wealth fund is a good thing. Sovereign bond is a good thing. You can get some money because you are domestic liquidity. But anybody who's anybody, any clerk sitting in finance ministry, today also there was somebody who came out and said, we have not understood it, we have not examined it. Then you should have said, we'll come back and just put at least, you don't want to do anything positive, don't do negative things.
Okay, in fact, just to take your point forward, I remember Finance Minister did acknowledge even if these FPIs try to convert their structure, that's not tax neutral.
Yes.
It's not going to be tax neutral. But having said that, you've covered most of the points.
And it's not a big issue, you know. Look at
all
our
the
hedge
pension
funds.
funds are mandated to be registered as trust.
Absolutely. No, I'm saying you will just say it is symptomatic of the policy making of the country. I think I'm better off in XYZ. You know, $85 billion China has got this year. Is anybody, you're making, you know, the finance minister is posting photos of the prime minister and showing FDI and maximum FDI. Is anyone addressing this? That is what Samir Arora's point is. That
and it's quite a contrast because for the longest time, China had closed its economy to FIs and now they're trying to loosen their norms and at a time.
And we are much better, I would still say we are much better corporate governance and rule of law, rule of accounts. You should read that there's a, you know, an accounting firm called Rui Hua in China, one of the biggest ones. So many cases, Neeraj, which is just Satyam multiplied. You know, the company overstated its deposit by 4 billion. It understated liabilities. It's a mess. And those same guys have gone and collected IPOs. People are giving them money. We have much finer companies, much better models, and the kind of companies we have, you know, the wide plethora.
Right. Ajay, so the moot point or the question now would be, we've shaved off nearly 1,000 points post the union budget. It's not that economic slowdown did not persist before the budget. We were still getting money from the FII community that time.
Absolutely.
But what from here on, portfolios are bleeding. Just fundamentally asking now at current levels, would you suggest people now to completely stay away? Is there more downside left, or now is the time to show that gumption, go ahead and make a portfolio?
It's very difficult to say. You know, even we thought 11,200 would not be taken. You know, those 200 DMA levels become very significant levels in terms of technicals and sentiments. Those are broken. And in this kind of a scenario, what you need is that, you know, a senior person comes in and says, we'll take what it takes. I think the market is overreacting. The situation is much better. I think that credibility is lacking right now. So in that scenario, I would say staying away is better. Conserve your cash. Maybe you lose 1 or 2% on the upside, but I don't see the risk is much more on the, you know, going down side. How much further it would run, I don't know. You know, it all depends on what are the flows like. At least the domestic flows have held up. For the last 4 or 5 years, you have not really performed. You have underperformed the global markets, but we were getting a hope rally that yes, things will turn. A lot of good structural work has been done. Bottom of the pyramid work is done. But you have to address the producing classes. You have to give some succor to, say, an auto, to a construction, and not, you know, just when auto is 30% down, someone else in some other ministry says registration, you know, costs go up 10 times. Now in a car, I might not mind, you know, 10 lakhs car, 20 lakhs car, 10,000 rupees. But in a bike, it matters. Bike, the insurance also going up made a difference. And then there is no NBFC to lend to the bikes. That is the bigger problem. So that core NBFC problem, core aggregate demand problem, you have one of the highest real interest rates in the country. You have to cut rates fast and furious. And you have a very academic monetary policy committee which has been wrong for the last 3 years. They don't get to face irate customers. They don't have to explain falling markets like you and us. And you know, they have a security of tenure. When you have been wrong for 3 years, your inflation assumptions have undershot, and you have destroyed the demand in the economy as a result.
Yeah. Ajay, final question, and I think the sentiment is coming pouring out when you're giving these answers, so I hope somebody listens.
Because it's not so bad, the situation. Why the sentiment is pouring, Neeraj? Because I think it's a very fine
simple ways
country
to connect this.
And a little bit of move. You know, you slash your GST rates, you slash your auto GST, give auto a fillip even for 6 months.
Somebody else said this too, let very a limited time
yes.
Boost that could come in which could help. But okay, until that happens, because we right now know that the people are trying to make attempts to get them to series, and maybe it is not happening, maybe it will happen with a bit of a delay. Until that happens, Ajay, let's assume that is the reason why the markets are doing what they're doing. So until that happens, would you believe sitting on cash, on liquid funds right now is better? Wait for the announcements and the print to come in. Better to buy 10% more expensive as opposed to trying to time the market.
Absolutely. Wait. Because right now, Neeraj, a lot of people are saying sell on every rise. So I don't know how much more the FIs want to sell. Who knows? So I would say the strategy has become sell on rise. So it might be better to wait, and I would not even say liquid funds. I worked in the mutual fund industry for a lot of years, headed two funds, but the way we have got blindsided on the credit funds, I would not. I am telling whoever bothers to still listen to me that keep in a bank fixed deposit and pay the tax, no problem. But this time, conserving cash is better right now. I'm hopeful RBI will do something on 7th. If they do 50 basis point, that will give a fillip. 25 at least will start. But the first 3 rate cuts by RBI have, they are filling up the holes dug by Raghuram Rajan and Urjit Patel's, MPCs being really out of whack with the reality. So that 3 rate cuts have really just brought you up to the ground level. You need more rate cuts at 2.5% real rates. You're really struggling with the rest of the world. China, 30% of US-based companies' production has started moving out of China. Where is it going? It's going Bangladesh, it's going Mexico, Brazil, Vietnam. Vietnam is getting so much investments. You try to set up a plant here, there'll be 200 vultures who come in and demand their pound of flesh. Nobody wants to start a business, and then so I'm advising about 10 startups, Neeraj. 1,500 angel tax notices. So any poor guy who wants to do a startup also, someone somewhere, and I am clever, I started with 10 lakhs, now I have sold my equity for 3 crores, I get an angel tax notice. Pay tax on that 3 crores.
Okay. Well, let's hope things improve sooner rather than later, Ajay. We all are beasts of optimism, and
absolutely,
that's what drives the market.
The market is.
Yes,
yeah.
So let's hope, cross fingers for that. Thanks so much for this candid chat, Ajay.
Thank you.
Really appreciate it.
Thank you.
That's Mr. Ajay Bagla with his thoughts on the market. Sit on cash, Navneet.
Yeah,
if you have that, sit on cash.
That's a very good point. Only if you're left with any sort of cash after the carnage that we've seen in the month of July, and it continues at the start of the new month as well. 10,945 for the index, 173 points lower. Bank Nifty also down almost 550 points in trade. Okay, time for us to address some earnings then. It was a mixed bag for Hester Biosciences in the month of June. In fact, for the June quarter, the operational performance remained steady, while the bottom line saw a marginal dip. Let's discuss the quarter gone by in more details with Rajiv Gandhi, who is the MD and CEO of the company. Hi, Mr. Gandhi. Good afternoon to you, and thanks a lot for joining us today on Bloomberg Quint. Well, looking at your numbers, you've managed to maintain the margins, but there's no growth, meaningful growth actually, which has come in either on your top line or on your bottom line. Could you take us through the highlights of the quarter, and especially the poultry segment, which contributes nearly 80% to your top line?
Yes, as poultry contributes a big chunk in our top line, a situation in the poultry industry has caused our sales to be a little lower than what we had expected. As you may be aware, the maize prices at the moment in India have shot up unexpectedly very high. Poultry feed, wherein a poultry farmer spends 75% of his total outlay of his budget, and in that it is maize which is the main component. Now the prices of feed therefore have gone up so high that the poultry farmer is forced to divert all the resources more towards the feed procurement, and thereby trying to cut down on all other issues including health, sanitation, etc. So therefore there has been a little decrease in the sales as far as the poultry segment is concerned.
Right. If you look at the performance overall, as you rightly mentioned, I think the maize prices impacted the poultry healthcare segment. But tell us, Mr. Gandhi, how are the prices now in the second quarter? Can we expect a better performance now in the current quarter?
It all depends again on the maize prices. As I'm told, they still continue to remain high. This particular month being the Shravan month, where the consumption of meat is low. I mean, that's statistical, it's always been that. But I think things should pick up by the end of this quarter, or say mid this quarter, and things should be well on track. All depends on the monsoon, depend upon the maize, etc., etc. But all said and done, the poultry health spending of a poultry farmer not being so much in terms of a percentage, there is a high chance, considering that in the monsoon there are disease situations, etc. So they would invariably not try to cut on all these things, and they would do the spending. This is what we feel.
Okay, and the other segment, the animal healthcare segment, where the contribution on the top line is moving higher. As you can see in the current quarter, it was about 13%. You're also looking at some bit of expansion here. So what's the outlook, and what is the internal target with regard to increasing the contribution from this segment?
Our internal goal and target is to grow the animal health division by 50% on a year-on-year basis for the next few years. And the focus within that division is the vaccines. The brucella vaccine, which the government of India has taken up towards immunization, towards eradication programs. In the last budget, it was announced a big outlay towards the foot and mouth disease and the brucella vaccine immunization. So we hope to be the part of the brucella immunization program led by the government of India all across. And we see a big boost in our sales coming specifically for the brucella vaccine.
When do we see the Hester Nepal business turning profitable? I believe even in the current quarter they posted losses.
Yes, in Nepal, as I have mentioned in the past, our dependency is more on the tender business, that too from the FAO of the United Nations for the PPR vaccine. The plant, in fact, was specifically set up with the objective to supply PPR vaccines mainly in the African continent, where the disease is very rampant over there. The tendering by the FAO has not yet picked up. We have been constantly in touch with FAO. In fact, recently tenders have started coming in. They do feel that now there would be a spurt, a rise in the tendering. We are, to be very honest, a little bit dependent on that tendering, but we do hope that I think by this quarter and next quarter, this tendering should pick up reasonably well.
Okay, just a last question, sir. In terms of gross profit margins, you've managed to increase them in an environment like this, and also your EBITDA margins have slightly gone up for the quarter. Would you be able to maintain this run rate in the remainder of the year at a time when we've not seen any meaningful growth on the top line?
We are reasonably confident on the gross margins, because we are continuously working on improving our production efficiency as well as changing our product mix. We have on a quarter-to-quarter basis tried to do this. We have achieved so far, and we have reasons to believe at the least we would be able to maintain these margins, if not better than.
Okay, Mr. Gandhi, we leave it at that note. Appreciate you joining us today and taking us through the quarter gone by, and all the best to you for the remainder of this financial year. Well, that's the management of Hester Biosciences. Revenue is going up by almost 11%. Bottom line, there was a degrowth, but in an environment like this, they did manage to maintain, and there was a marginal increase seen even in their gross profit margins and also in the EBITDA margin. Stock, however, is trading in the red territory.
Shouldn't surprise anybody what's happening to markets and stocks today. By the way, the Nifty Bank is now trading 600 points lower, and we just spoke to Ajay Bagga, who was talking about how the FPI change in sentiment is a big draw. Let's get that conversation going as well, a quick one, because foreign institutional investors have sold for all but 4 days in the month of July. The sell-off has contributed the most to Nifty's 1,000-point slide since touching all-time highs of nearly 12,000 in early June. Then, foreign investors have pulled out since then, about 13,000 crores, causing the benchmark to give up 10 percentage points from those elevated levels. To know what can happen and what's the mood of foreign investors, let's speak to Michael Preiss of Taurus Wealth Advisors, joins us right now on the phone. Michael, good having you. Thanks so much for joining in. Depending on how closely you monitor India, what Is it the change in the taxation policy that is the principal reason, or would you believe it's a combination of that plus the slowdown that we're seeing? Because frankly, the world might still be looking marginally okay. India is looking like an ominous place to invest right now.
Yeah, look, I mean, that's a good question. I mean, I would like to start with sort of this big dichotomy we see between the global fixed income market and global equities led by the U.S. As you know, U.S. equities went to an all-time record high, whereas the bond market globally, with 25% of all bonds, roughly $14 trillion in negative yield, seems to indicate that there's recession concerns, that we potentially see more meaningful global deceleration. And don't forget, the United States, India, and Brazil are the only three major countries with still a positive PMI above 50. A lot of all other major countries in the world are increasingly in a contraction. So, look, you mentioned it earlier that also Indian equities have reached all-time record highs, and now I think it's just normal that we see a more meaningful pullback in equities, because I think the concern about growth is still very much the case. And I think the bond market could be correct in its assessment that global growth could continue to disappoint, hence also the Fed cut overnight.
Michael, just focusing on the Indian markets, yes, they were trading at all-time high levels, and also the valuations, as you know, being indicated by a lot of market experts, were on the higher side compared to other emerging markets. But the pace of fall that we've seen post the union budget back home has been quite sharp, and it's only intensifying. And one factor which stood out is we mentioned that the flows, the FIs have been selling into the Indian markets, and just for the month of July, they've sold over $2 billion now. What we want to understand is this selling going to continue even in the coming months? Are you seeing any sort of shift in preference now in the emerging market basket, where funds will sell in Indian markets and move to other markets like China or Brazil?
Yeah, look, I mean, that's what we seem to have been seeing, right? And if you look at India, India was always a market for global investors where people are willing to pay for growth, because India is one domestically large, meaningful economy in the world that you need to have exposure to. But in terms of price-earnings ratios, India actually became one of the most expensive markets in emerging markets, with a PE close to 25 to 26, 27 PE, right? So for foreign investors, especially given the concerns about global growth, at these valuation levels, maybe in India was a good opportunity to lock in gains. And I think this is what we have seen. So basically, people are reducing India exposure because of valuation concerns.
Only attributing the outflow to the higher valuations, does it have no role to play with the higher surcharge that is now being levied on the FPI community?
I think that could be a part of it, but also, for example, things like Yes Bank and the other sort of corporate issues in India, I think, have led to a little bit of more negative sentiment. But look, I would still consider this is a global emerging market story. And don't forget, look, again, last year, according to Bloomberg data, 95% of all asset classes had negative returns. Then you had this major Fed pivot, right, where sort of the U.S. equity market rallies strongly on two hopes. One hope for meaningful interest rate cuts, and secondly, hopes for a U.S.-China trade deal truce. And both are not really materializing. I think I think the Fed made it very clear that they still want to be measured. So that, again, is leading people to take money off the table, which to date has been actually a good year in equities. So I think just a normal and healthy correction, and people are basically booking gains.
You're buying into India right now, Michael?
Not yet. I think we will see another sort of lower valuation level I think for people to feel that the valuations actually justify net new long purchases. Because I think also, having said that, I think the U.S. and the European markets now potentially could be at risk of a sort of shorter-term pullback in that sense. So I think global equities increasingly might have some downside risk from here.
Okay, I mean, just wondering, one last question from my end. How much of a correction do you reckon global equities could have? I mean, by global equities, I presume you mean the mainstream U.S. markets as well.
Yeah, yes, correct. Because don't forget, look, the U.S. equity market year-to-date is up 18%. That is still very much on the high side, against that increasingly deteriorating global growth. And don't forget, depending on what the outcome is in the U.K., with a hard Brexit potentially, we can see more macro risk. And in a year where equities have rallied, also India reaching all-time record highs, people realize that maybe the fundamentals don't necessarily justify equities at these levels. So hence people are booking gains and potentially revisit this at that lower valuation level. How low these valuation levels can come, I don't know. But I would say that maybe now is not the best opportunity to go long. I would rather wait for cheaper prices.
Michael, so good having you. Thanks so much for the chat today. It really helps our set of viewers as well. That's Michael Preiss of Taurus Wealth, believing that there could be lower levels because the globe might be turning around as well. Hadrien, Mendonca, let's try and focus on our markets for now. And actually, just before getting Hadrien, Mendonca, keep in mind that the broader end of the spectrum, which we marked some time ago, has now turned even worse. So it's a Bliss GVS Pharma, which is down about 20%. Care Ratings is 18.5%. India Bulls Ventures is at 209, 12.5%. The highs was about 750, if I remember. Sadbhav Engineering the last few days has been clobbered another 8.5. HCL Info is getting ready to dip into single digits. India Bulls Real Estate, MRPL, Delta Corp, the list is unending. Dish TV is back to 25, 26 odd levels. Hadrien, Mendonca, Johnson, on a day when the mood and the sentiment is rather somber. Hadrien, good afternoon. Thanks so much for joining in. To be fair, to be candid, the bounce that almost everybody was anticipating didn't quite come about or didn't last for too long. Today's just been a slide which is looking very, very precarious. Would you believe that the next few days we'll see lower levels on the Nifty or the Nifty Bank?
Yeah, good afternoon. Given the fact that nothing seems to be good, in this afternoon for our markets, given this week has been completely terrible. If you leave out Wednesday's trading session, the bounce that we got, which gave us false hopes, on the street that we could see some kind of reversal in our markets. It was completely thrashed after the selling that we are seeing today. The advanced decline ratio is completely, in the doldrums. There don't seem to be any kind of revival in the mid and small caps. Large caps, if not, for the saying, has started cracking bitterly. I think going forward, we would have to look at the, how the larger picture for the overall markets, the structure, how the structure is actually looking. So, going back on the monthly charts and, visiting, how markets fared from 2016 lows to the June 2019 highs. And if we take a retracement of the entire rally in the past 3.5 years, I think we are very, very close to the 23.6% retracement level that is coming around the 10,850 zone. We are not too far away from there. Just to give you a reminder that if this current rally that we saw in the last 3.5 years is strong enough, we should not break below the 10,850 levels, which is a 23.6% retracement area. If we do so, if the markets actually break below those important support areas, then I think going forward we could see much more pain in our markets.
Okay. So are you initiating a fresh short, Hadrien, by any chance?
See, initiating a fresh short when the Nifty is down 200 points, Bank Nifty down 500 points wouldn't be a wise thing to do with just less than an hour to go for the markets. I think right now it wouldn't be a good opportunity to go ahead and short sell afresh. But definitely, if somebody is holding on to the short positions, one should consider holding them. Because we should actually avoid getting into the predicting game because and we should actually get into try and understand what the market is actually telling us to do. So right now the price action is actually indicating that it wants to head even more lower. Even despite the oscillators, many oscillators are actually indicating the current fall is very, very overdone, and we have entered into a very heavy oversold territory. But I think the price is not letting go. The price action is still indicating that there are more lower levels to come. Important levels for me, as I mentioned earlier, 10,850 is something that I'm really watching out for as important support areas.
Okay, so watch out for 10,850 on the downside, but the base for this market has definitely moved lower. Even if you look at the next weekly expiry, which is on Thursday, the maximum open interest on the call side is at 11,200, and on the put side it is at 11,000, but remember the index still trades below that mark of about 10,900. Now 185 points lower for Nifty 50. Hadrien, you're not suggesting to take any fresh shots on Nifty. Of course, it's already down 190 points in trade, but individual stocks, are there any bets to take on that side?
Yes, definitely. We are seeing fresh crackdowns on a few stocks, and the first stock that we have turned bearish after the breakdown that we saw on the daily charts is Larsen & Toubro, LNT. We have seen the stock has actually sustained below its long-term 200-day moving average, and after a consolidation of one and a half week, the trading range has been broken after today's decline. So I think this actually could be a good opportunity to short sell Larsen & Toubro. We are expecting a target of 1330 in the near term with a stop loss of 1375. The second stock that we have turned bearish on is an SRF. Again, the stock consolidated for the past 2 weeks, showed signs of base building, but the base was actually has actually turned out into a resistance trading range that got broken today. I think again, similar to LNT, we have seen similar breakdowns on SRF futures as well. So we can consider going short on SRF for a target of 2510, keeping a stop loss at 2630, with a disclaimer that we may have also given an advice to our clients as well on the front.
Okay, not surprised, Hadrien, you got 2 short calls, one on LNT futures and the other on SRF. Just want to highlight few stocks which are bucking the trend today in a falling market. We already highlighted, by the way, Ujjivan. This one comes out with the numbers tomorrow, and surprisingly, this one's still maintaining the gains. It's still 7% higher, and Voltas continues to do pretty well in today's trade. And besides that, Tata Global, which came out with its numbers yesterday post-market hours, was able to maintain at least the margins, though the growth on top line or bottom line was hardly between 2 to 5%, but the margins remained intact, so 2.5% higher for this one. And also another Tata Group company, Trent, also came out with the numbers, and that too is seeing some bit of positive ticks in today's trade. And not to forget Cholamandalam Investment, which went up 6%. Trent, by the way, is almost at high point, 6.5. Cholamandalam was up 6% yesterday, reacted positively. Brokerage is also quite happy with the performance, 2% higher for this stock, even in a weak market. So there are certain stocks which are bucking the trend, maybe on back of earnings. On that note, let's bring in our next guest on the show. Kunj Bansal of the Sarthi Group joins us now on the show. Hi Kunj, good afternoon, and thanks a lot for joining us today on Bloomberg. When it's a sharp fall, the selling pressure is only intensifying for the Indian markets. What would you attribute this fall to? The slowdown which already persisted in the last 2 to 3 months as well, or is this a budget-related issue in the form of higher surcharge for the FPIs?
Yeah, so I will, to answer this question, like to extend the time horizon for our discussion to slightly longer. So let's go a month ago. As we have observed that largely the large part of the fall has come in last month, specifically maybe from the budget day, but still, let's go before that. The contradiction at that point of time we were facing was that the macroeconomy was not doing well. The macro numbers were not coming out good. The GDP numbers for Q1 had come out to be a low of 5.8% and a lot of other non-supportive factors. The micro support in terms of earnings was not there. So it's not that only in this quarter the earnings, corporate earnings have not been there. In fact, corporate earnings now have not been there for last 3 quarters. But despite that, the market was at the life high, more specifically in terms of large cap indices. And there we were discussing, there was the question that why so much of disconnect between fundamentals and valuations, or fundamentals and market level. So here we have the answer. Now that part has been taken care. The market levels or the valuation have fallen to come in line with the fundamentals. Now in between, what happened? What was the trigger? Triggers could be any. Was the budget the trigger? Possibly yes. Was taxation the trigger? Maybe one of the reasons. But as I see it, that the fall has been in line with these worsening macro and micro numbers, and to that extent it's a good stage that the market has been coming to and has been reaching. We could continue to see some more fall. Whenever we have such sharp falls, nobody knows where the bottom will be. But in my view, as I said, the trigger has been budget. The trigger possibly have been the higher taxation in the budget, but the fundamentals were anyway calling for a correction in the market for a long time.
Okay, so a combination of both. Fundamentals, valuations were on the higher side, but I think the budget triggered it. That's what Kunj is also mentioning in the form of higher taxation. Meanwhile, just want to address Marico's number, if you could just pull up the stock as well. The profits have come in at 308 crore versus Bloomberg estimate of about 318. And as you can see, just after the numbers, there's a sell-off which has come in from Marico. The stock's down about 3%. Important to watch what was the volume growth during the quarter. Our poll was showing a figure of somewhere between 6 to 7%. Remember, Marico for the longest time was not doing well, but from the last few quarters, because of cool off in the copra prices, the stock was started to perform. But we'll have to see more details, deep dive into the numbers as in what's triggered the fall posted. So 3.5% lower volume growth will be a key thing to watch out, and also how the gross margins have performed, because they were expected to ease after the copra prices started declining in the last many months.
Just looking at some of the numbers, I think while the net income is slightly below estimates, the margin number is looking maybe better, so keep that at the back of your mind. However, the markets are right now concerned about volume growth, and if indeed the gross income or the volumes are not picking up, then every reason for stocks to correct. We'll wait for what the volume growth numbers come out, because I must admit that thus far most companies have managed to hold on to their volume growth numbers. In Marico's case, holding margins would be relatively easier because of falling copra prices, so that shouldn't worry anybody. But if indeed the revenue has disappointed, then maybe there could be a bit of a disappointment. But again, it's too much too soon. Maybe Kunj has some thoughts here. He may not have a thought on Marico individually as a stock, but Kunj, currently the 2 or 3 FMCG names, pure play FMCG names that have come out thus far, HUL, Dabur, one can argue that they were not blockbuster volume growth numbers, but the volume growth numbers were largely in line with what the street was working in. Would you presume that with the presumption that Marico has also done that, and if the margins are holding out, would you believe that that's not bad news, and maybe that's one area of cover for people looking for some?
Yeah, so 2-3 ways to look at the answer to your question. One, of course, you are right that in such times when market is falling by the pins every day, where does one take a cover in? And obviously that's why we have aggressive sectors and defensive sectors in the market. And the 2 or 3 most obvious defensive sectors are IT and FMCG. And if we notice at the performance of the shares from these sectors, obviously they have been outperformers. So we haven't, especially IT more so in case of applicable for large caps, not as much for mid caps. So they have been clear outperformers, and so have been the FMCG. In fact, further extending your discussion to include paints, which generally gets included along with FMCG. Also, in fact, we have seen a surprise positive volume growth numbers coming in from the market leader there. And obviously, as a result, the stock is trading at life high valuation, life high price, 52-week high price. So yes, the ability to hold on to the expected numbers is a reasonably satisfactory outcome in the current environment when there is a gloom and doom all around.
EBITDA numbers seem to be okay, right?
Yep, the revenues, Neeraj, we were expecting that to be 2176 and it is at 2166. So top line is in line, but we were expecting the margins to expand to 20%, and it looks like it would be on similar lines, because we've seen the cost of materials consumed falling both on year as well as sequentially. And of course, that will be a function of cooling off of copra prices. But one factor which is divergent to the other FMCG companies, where we've seen a lot of these companies in a slowdown environment, they were cutting down on their ad expenses, but Marico is one company which has increased their ad expenses actually on year-on-year basis. It's at 219 crore versus 166 crore, which was seen in the corresponding quarter. So ad expenses higher, revenues in line, and of course, cool off of copra prices clearly visible in the cost of raw materials which has been consumed during the quarter.
Interesting result reaction to Marico. On a good day it would have been okay, but on a bad day it's probably not. At 28,000, by the way, let's move on from Marico, because while those numbers are one thing, it's the market which is more worrying. Now I think we are below the 200-day moving average. If we can pull up that Bloomberg chart and the RSI function on the Bloomberg chart, it shows you the different moving averages. I think, okay, yeah, even our charts, the bank Nifty is now collapsed below the 200-day moving averages. That's the issue. The Nifty was anyways below that. That number was 11,200. Now the bank Nifty is correcting. Now before we get a fundamental view from Kunj Bansal on how does he view this financial space, Hadrien Mendonca, does this open up fresh downsides, or is it that a bit of a correction has happened already and therefore the risk reward is not in a trader's favor?
Yeah, so not only the 200-day moving average has been breached by the Bank Nifty, but it has also breached the May 2019 lows, which is actually the highest low. If you take the rally from 2016 lows to the all-time high level, so this is the first highest low that we have broken in the past 3.5 years. It doesn't seem to be a good sign currently, but yes, to answer your question that. Has the markets corrected too much and is it oversold? Yes, absolutely. Is the risk reward in favor of the bulls? Yes, absolutely. But we'll have to wait it out to take some kind of confirmation before actually entering into long positions. Right now, there seems to be no confirmations. Without confirmation going long, it would be like completely blind bet and just speculating that we'll get a bounce.
So Adrian, the simple question is then therefore, because this has broken some key levels, is the risk reward in our short traders' favor right now, or would you maybe use options to trade this market currently, the banks in particular?
Yeah. So clearly, a trend trader will clearly go short because important support levels have been broken, and this time it's a 200-day moving average. So yes, definitely, short traders will be more than happy to see the 200-day moving average broken. On the downside, it opens up levels up to almost the 28,000 or 27,900 levels. That is the next important support area where we could see some kind of stabilizing for the Bank Nifty going forward.
Kunj, come in on what's happening to banks. I mean, you could have a sporadic bank or two bouncing up, but say for one or two names, like maybe ICICI and Kotak, the others, even the good ones, have either shown a chink in the quarterly numbers or in the commentary have sounded cautious. Clearly, all is not well, and we've seen the accidents that have happened for some of the mid-sized banks, RBL, DCB, etc. You dwell on the long term. Is this providing you the long-term opportunity? Or, I know we don't like timing the markets, but I'm still asking you, can there be a better long-term opportunity available in the financials over the course of the next couple of months?
So before I exactly answer your question, let's just again look at also the fact that there was a very few concentrated banks which were attracting buying interest for last 1, 2, maybe 3 years. And that's why those were going up, those were becoming overowned largely by institutions, and within them probably more specifically by global institutions. So when the selling comes specifically again from the global institutions, obviously the selling will come in these banks only, these overowned stocks. And that's why we have seen correction coming in the banks in some cases despite good numbers. So one, that is on pricing and valuation and correction. Two, on fundamentals, yes, obviously when the scenario all around is of a low demand, howsoever good you may be, if there is no borrower coming on your doorstep, or even if you are going to somebody's doorstep but he's not wanting to borrow, you won't be able to lend. And that is where we have seen in case of some of the banks no demand being there. Third, and what also happens is that a lot of managements / promoters, which in Indian case these two words most of the time tend to become fungible, also try to take advantage of these kind of market situations to adjust the older ups and downs or expected ups and downs from the future to kind of show the bad numbers, because this market will absorb. This market doesn't expect you to report good numbers, so might as well take advantage of some pending issues of last 1 or 2 or 3 quarters, or some pending issues which might come up in next 1 or 2 quarters, and quietly pass them off in this quarter as bad numbers, blaming it on the environment. So that could have possibly been one of the reasons for some of the mid-size organizations to do this. So that's more from the analysis point of view. From the going forward, to answer your question, one, of course, it purely depends on the horizon. So if we are taking a very short-term horizon, which will be a trading horizon, and that can't be an investment horizon, probably there is a lot more risk looking at the way the disinterest that is there in the market. But again, if we extend that horizon, let's say not too long ago, 5-year, 10-year, that generally equity gets talked about. But I guess even if we extend it to 1.5 to 2 years, which means 6 to 8 quarters, I think from current time onwards to next 1 or 2 months, it is certainly a very good opportunity for buying quality stocks. at relatively reasonable valuation. So in case of some of the larger banks, in absolute terms, valuation still wouldn't have come to a level at which one could call them value investing or one would like to buy. It's only the relative valuation correction that has happened from their peaks. So yes, for a 6 to 8 quarter horizon, this is a good opportunity that has come up currently, and maybe over the next 1-2 months, at any correction that will be available in the quality stocks, more specifically since we are talking of banking, quality banks for one to buy in.
Okay, Kunj, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. And so far, remember, the markets were taking, or rather investors were taking refuge to quality. And when quality starts to correct, you know there's something going wrong, because you've got the HDFC twins. They're dragging the index lower by nearly 40 to 45 points. ICICI Bank is corrected. So far, some support was also coming from the IT pack. Remember, Infosys was outperforming Nifty in the month of July post its numbers after it upped the revenue guidance. But I guess that too have succumbed to selling pressure. Infosys today is dragging the index lower by almost 25 points. TCS also down, and your other heavyweights from the likes of State Bank of India, L&T, ITC, all of them are seeing cuts. So advanced decline even for the Nifty constituents is not looking great at all, Neeraj.
It's looking very, very bad. Well, Navneet is putting it mildly, but yeah, it is looking pretty bad. It's just the number of stocks which are falling like 9 pins at the broader end of the spectrum, and even on the Nifty 50, frankly. I mean, just look at what's happened to autos, for example. Actually, speaking of autos, let's just dwell on that for a bit before we move back to the markets, because while the larger universe is getting punished, this one, due to problems of its own, keeps on getting dragged down in trade. A quick technical perspective, then getting Yatin Mota for a quick roundup of what's happened thus far, and then getting an analyst. Hadrien, Mendonca, Tata Motors is at 127.
Oh, God.
Can it go to levels which most people were merely joking about until recently?
Yeah, so the Feb 2019 lows has been broken today, because 129 was the lowest low that Tata Motors hit, and we have seen a fresh breakdown. So I think levels further lower cannot be ruled out at all. No matter how oversold the stock looks currently, price is actually intending to go much more lower. It is absolutely not advisable to go long, even after seeing such a huge correction constantly. Week on week, it's being completely hammered. It's very close to its very important 2011 lows now. If we break those levels as well, it's going to be havoc going forward. 125 is that very important support of 2011 lows. It's very difficult to take a long call at these levels, but trend is actually indicating it wants to go lower from here.
Okay, well, the trend is indicating that it wants to go lower. I think the trend is also indicating the sales also are headed lower. Let's get in Yatin to give us his sense of what he made of the auto sales numbers thus far, and a roundup of some numbers as well. Yatin, no, don't smile, it's not allowed. It's looking very bad, but so what have you made of the numbers?
So Neeraj, I wanted to say that if you are having a job somewhere in the capital markets, you can't afford a car anymore. The kind of market fall we have seen clearly is nothing to laugh about. But talking about auto sales, nothing great there. If you look at Maruti's passenger vehicle sales, the total sales were down nearly 33.5% to come in at close to 1.09 lakh units. More importantly, this is the absolute figure which is lowest since 2017 June. So probably in a period of 2 years, this is the lowest figure that Maruti Suzuki has posted as far as monthly sales are concerned. More importantly, this seems to be the dealer inventory adjustments. In the conference call, Maruti said that on a sequential basis, the dealer inventory days have gone up by 3 to 4 days, and probably in order to correct that dealer inventory, Maruti is taking a hit on the wholesale numbers at this point in time. Mahindra and Mahindra, no different. Automotive sales were down 15%, tractor sales were down 12%. Similar is the kind of fall that we saw for Escorts, 13.5% down as far as their overall tractor sales were concerned. Bajaj Auto also came out with their monthly numbers. Their sales were also down 5% on a year-on-year basis. So clearly there also we are witnessing some bit of pain. However, if you look at it from other expectations of Hero MotoCorp. We are expecting a double-digit fall there. As far as TVS Motors is concerned, there the sales were around 13% to come in at 2.8 lakh units, slightly lower than the expectation. So if you look at the auto sales overall, it seems that July is shaping out to be even worse than what June was. And more importantly, it is evident that now OEMs are cutting down on wholesale supplies to dealerships in order to make the inventory much leaner. Probably the preparation for festive season is something that OEMs are trying to do at this point in time. Before that, if the inventory is slightly leaner, they would be able to gauge the market much better.
All right. Well, thanks a lot for that, Yatin. Let's get more perspective on this with Ashwin Patil of LKP, who joins us right now on the phone line. Ashwin, the markets are maybe the bigger culprits, and which is why the reactions, but maybe you wouldn't have been surprised to see these reactions even on a good day on the markets, because the numbers, by and large, have looked very, very wobbly.
Absolutely. The numbers have come actually much more dismal than what they were expected. And this story has been there across the board for all the companies, sectors, and we are seeing about double-digit negative growth in most of the companies that have come out with the numbers till now. For example, if we look at Mahindra and Mahindra, the volumes in all the sectors are down for it. Also on the farm equipment segment, where there has been some sort of shortage in the rainfall in June, as well as in the first half of July. So that has led to kind of fall in the tractor numbers. Also, we see that the tractor cycle has almost is at its fag end, and maybe that is another reason why the tractor numbers are looking so bad. Coming to Maruti and then Bajaj Auto and TVS, all of them have reported a really bad set of numbers, because most of them are facing the same problem of inventory pile up at the dealers end, and hence they have to cut down on their production and give slightly higher discount and all. I mean, still the demand is not yet recovering. So overall, we are seeing a lot of pain, and which has continued and become much more deeper than we have seen in the month of June.
Well, Ashwin, weak demand, regulatory cost push for all these OEMs, the car sales now are at the lowest that one has seen since 2000, 2001. At least that's what the data has been indicating. And this is for a market which we keep talking is underpenetrated for the auto pack. But tell us one thing, we've almost seen numbers also, earnings coming by from most of these companies. And experts are now of the opinion in the second half, owing to festive season, demand could come back. Do you expect a major recovery in the second half, or it will just be mild?
I don't expect a major recovery. There will be some slight recovery, considering, like if you see sector-wise in the passenger car segment, maybe the inventory correction that we are seeing right now will be the leading reason for some recovery in the coming months. But it may not be from the macros. Main reason is just the inventory correction that the companies are taking, and the BS6 vehicles are getting launched. They are getting launched at higher price. Hence, the demand dip that we are seeing right now is maybe one of the reasons. That may be one of the reasons also. So going forward, if now till now July and the monsoons have been at about 11-12% deficiency. So maybe if the monsoons pan out well in August and September, then this deficiency may get reduced, and some sort of trigger may come from the rural markets, and that may lead to somewhat recovery in the coming months. And also any tax incentives or SOPs coming from the government would definitely lead to a good surge. But those are all ifs and buts. So right now, I think that for the festive season to be very good, all these triggers need to pan out, and that too in time.
Okay. Ashwin, one last question from my end, really, because I hear a lot of people speak about this. Would you go out and try and do a staggered buying start in any of the auto names? Almost everything, as you said, has posted wobbly numbers. is the better time to buy them later, or would you start staggering out your purchases?
I think a bit of staggering is quite, it can be done right now in certain stocks like Maruti maybe, and Hero Motocorp also we are having a positive view, and the results also were not that bad. So I think these couple of stocks one can look at and start buying in a staggered manner, though, it should be not front-ended, it should be back-ended, looking at how recovery comes in the next couple of months. So maybe like about 10 to 20% of what they want to buy, they can start right now.
Thanks so much for that, Ashwin. And really appreciate you joining us today. By the way, just the intraday of the markets. I think some people might be happy even if the market is down 2% because the market was just down. The Bank Nifty was just down about 2.5% or more. The Nifty 52, a bit of a bounce there, if that means anything. I'm sorry, I'm smiling at this, but it's just so, the fall has been so precipitous that you can't do anything but just shrug and smile at the fortunes of everybody who was long into some of these names, because portfolios are really, really bleeding. Rahul Mohindar, who should be with us soon. Just before we get there, Mishika Parakh is here to talk about the list of the Fab 4 stocks of the day. Mishika, how did you manage to find 4 stocks in this environment?
It was a task, I must say, Neeraj, but let's see. The first on my list today is Trent, which is gained on the back of very good quarterly numbers. Their revenues are up 30%, net profits up 51%, EBITDA is up 2.3 times, majorly on the back of robust growth in the West Side and Zudio segment. Second on my list is Ajanta Pharma. The stock has gained the most in almost 3 months, with volumes trading at 7 times its 20-day average. Stock number 3 is Aegis Logistics. The stock has gained as much as 5% after snapping out of its 4-day losing streak. And last on my list is Voltas. Fresh longs were seen with high open interest of 24.8%. Back to you, Neeraj.
Well, thanks a lot for that, Mishika. So you would have to say a bit of a bounce there for the equity markets. Let's figure out how Rahul Mohindar is seeing this. He joins us right now on the show. Rahul, thanks so much for joining in. A quick thought, a bit of a bounce here. Not that I want you to comment on that, but just the trend that we've seen today and how neatly we sliced through 200-day moving average 2 days ago. Today we've sliced through the Bank Nifty 200-day moving averages as well. Maybe just holding out right now. How do you approach trade?
Good afternoon, Neeraj. Thanks for having me. You see, over the last week, I've been very vocal of the fact that this market is weak. Ever since 11,450 broke down, I've been of this view that we are really in bear grip, and we continue to be in bear grip. Our first target on the Nifty is 10,600. So I'm really not excited with the fact that we've had a 20 or 30 point bounce up from the lows. I am really looking at every opportunity to sell, and I can tell you the mood on the street seems to be, still very negative. You have investors which are all trying to talk about, should we sell out the portfolio, the little that we have. So there's a bit of a panic spell also coming in at the retail level. But when you look at technicals, key averages, as you correctly pointed out, the 200-day moving average, very important average, well respected in the past, have all broken through. I mean, both on the Bank Nifty and the Nifty. On the Bank Nifty, there is some support a little lower down at 27,700. And I think that's where one has to reassess the situation. My number one worry is that when I look at the top 10 heavyweights within the Nifty, it's hard to really pick, 1 or 2 names in those which I would see at, a good point to go long for, at least from a short-term criteria. So my biggest worry is it's much easier to pick shorts on the market than longs, which is why even in the previous shows you would have noticed I have more sell calls than buy calls, because it's getting harder and harder to try and randomly buy these drops.
Okay, Rahul, your commentary suggests you're expecting more downside. So what's the target on Nifty?
On the Nifty, our first target is 10,600. On the Bank Nifty, we're looking at the first support level at 27,700. I would maintain short positions here. If you're looking at the option segment, I think it would be safe to assume 11,100 is strong resistance. So you could be doing some call writing if you want higher than that. And, if you're looking at the Bank Nifty, 28,700, a very key level on the upside. So I think any spring back that you see will really be more of profit taking unless BSP really surpassed 28,700 with good volume. So still a negative picture there.
Okay, so we've bounced back from the lows, but remember today is also the weekly options expiry day, so that volatility tends to come in the last half an hour to 45 minutes of trade. Having said that, Nifty's recovered nearly 90 points from the lows, and Bank Nifty's recovered about 300 points from the low point of the day. Rahul, that's about the index, but what about individual stock ideas?
I've got a sell which I would put on BPCL, currently around that 344 mark. I look at 350, which is actually around the 200-day moving average, very strong resistance. So keep a stop loss above 350, 351. I think the next target on this is going to be 320. Mind you, the recent lows it made back in April, which was around 333, that level was also penetrated in the previous trading session. So that also goes down as a negative, more beyond the 200-day moving average. The second one would be a sell call, and this would be on Tata Steel. This has been a very weak stock over the last few sessions. It's not being able to pull back up. Our targets are significantly lower, but I'd say as a short-term trader, 395 is a good target to be working with to start with, 430 being a stop loss. Quite honestly, we still expect the stock to go lower to about 378 to be precise.
Metal stocks have been weak, and a sell call coming in on Tata Steel. Remember, the dollar index is now approaching the mark of 99. A month back, we were somewhere about 96 to 97. And with the commentary that we've received from US Fed, that would only mean dollar strengthening going ahead, which is not a good news for the entire space. All right, that's the currency as well. But that's from the morning. I think we've seen depreciation coming in for the Indian rupee vis-a-vis the dollar, right now 69.06. Pull up Reliance Industries, the big boy, with almost 10% weightage on Nifty. I think that's the one which is lending support to markets today, almost at day's high, 1180 Hadrien. Would you trade this one at current levels, considering we've seen Reliance trading below its 200-day moving average in last 5 to 6 sessions?
Yeah, absolutely. It has been, under pressure a lot. In fact, it has. If we manage to close, in the green, we could see Reliance snapping a 7-day losing streak, and an early sign of any kind of reversal. I think yes, definitely. Given today's move, and the minor bounce back and the hammer candle pattern which we are actually observing at the current moment. Mind you, the markets have not closed. If we close around the same levels, I think the hammer pattern will be confirmed, which means that there is uncertainty on the trend currently, and the trend in the past 7 days has been lower. This uncertainty of the trend would actually mean we could see some kind of reversal. So yes, one can actually consider going long on a Reliance. Going forward, we could see the 1195 levels as an important resistance, where we could see some kind of profit booking coming in again if we extend the rally towards 1195 levels.
Okay. Well, we're slowly nudging back towards that 11,000 mark, as Navneet said, led by Reliance Industries predominantly. But I think the world is not looking as bad a place. Remember, yesterday we were talking that with that they didn't do well yesterday. We corrected in today's session. CAC and DAX are in the green, and the Dow futures marginally in the green as well. Not that India has played ball to what the world markets have done, but it's just heartening to see that the world markets are doing okay. I don't know if that is probably one reason or otherwise, but yeah, certainly moving up in trade. I'm tempted, even though it may be a bit of repetition, but I'm tempted to ask this. We've to both our experts before getting what dealing rooms are saying. Hidden to you first, because we took your Nifty call some time ago. This bounce that we're seeing, would you use this bounce to initiate a fresh trade, either direction?
Yeah, see, the bounce that has come is definitely led by Reliance, and it has a direct impact on how the index behaves, because Reliance has a huge is a huge constituent of the index. So I think yes, definitely could see some kind of up move in Reliance, and if Reliance moves up, even Nifty would actually see some kind of bounce back. But I would actually not use this rally to actually initiate fresh longs, because still we don't have any kind of confirmations on if the current trend has reversed completely. We cannot just enter long currently. I think one should wait from here on to actually enter long. Something that I want to bring your attention towards is the MNC pharma companies. These stocks have actually been very resilient in the huge fall that we've seen in the markets in the last 1.5 2 weeks. If you leave out Pfizer, we've seen good resilience in stocks like Procter & Gamble Health, Abbott and Sanofi. So if anyone who is actually wanting to search for a safeguard or a safe haven where you could actually see the stock fall lesser than what the markets are, I think these three stocks turn out to be very good resilient names. Procter & Gamble Health, which was Merck, Abbott and Sanofi.
Myself, I didn't use the term long. I was asking if you can take a short trade as well. Just that caveat, because there's a bounce here. Well, maybe people could use that to initiate some short positions as well. Okay. Nevertheless, so that's the view from our experts. There's a bit of a bounce. We'll get in a view from Rahul Mohindar as well on in a bit about what would he be doing with regards to maybe some of the stocks that are bouncing up. Quick thoughts about what dealing rooms are recommending today before we get to Mayuresh Joshi. And it's about time that we do that. Darshan is here with his channel checks. Darshan, afternoon. What are your dealing room sources telling you?
Yeah, so overall there is weakness, but right now there seems to be a little bit of excitement since Reliance has managed to move up. The Nifty has managed to move up from the day's low. But some of the stocks that have been spoken about, SRF for one has recovered from the day's low. It will come out with earnings soon, and dealers anticipate a weak set of earnings. I believe the earnings are tomorrow. Obviously, the plant shutdown at Dahej will obviously have an impact, and that is something that dealers are taking into cognizance, and falling prices. So they expect SRF to report a weak set of numbers. Titan has recovered from the day's low, but it's down from levels of 1300. Some of the FIIs are actively, exiting this counter at higher valuation. Some of the high PE names, be it a Titan, be it Biocon, be it an Ayush, be it a Havells, all of them have seen a lot of exits from FII. So Titan for one is something. And the last one is Wockhardt. Wockhardt is flat in today's trade, but there is a buzz of a potential corporate announcement that could come in on the positive side. So that's something that we are watching out for in trade.
Thanks a lot for that, Darshan. Well, some thoughts from the dealing rooms that Darshan Mehta has picked up. Mayuresh Joshi of Angel Broking with us as well on the show. Mayuresh, afternoon. I don't know if I can call it a good afternoon or, but afternoon. The big surprise though, as we see, is that autos are in the green. Eicher is up 1.6%, Maruti is up 2.3%, M&M is in the green, Bajaj Auto is in the green, Hero Motor is in the green. What's happening here?
No, so I think they've got beaten down so much, Neeraj, that I think there is some respite coming in for this index as a whole. But I think generally, if you see the numbers, even if you see the July numbers which have started trickling in, the softness for volume still continue for a whole host of auto stocks, whether you talk about tractor manufacturers, whether you talk about two-wheelers, four-wheelers, the numbers are not completely out. But I think looking at the picture at this point of time still looks very, very bleak. So I think the only hope that the markets are carrying as the festive season comes around the corner over the next couple of months, there is every hope that at least on a month-on-month basis or a quarter-on-quarter basis, you should see some steady improvement, both in terms of demand dynamics. And again, I think the pipeline that probably gets built in at the dealer end as well. The inventory levels have probably come down over the last few months and quarters, but I think the pain probably still persists. So the price hikes that are expected for the BS6 transition, what kind of an impact will that have? I think some pre-buying will definitely take place, but how much of that will actually trickle down into volumes? And again, after that, what is the scene that you're probably looking at in terms of rural growth, semi-urban growth is extremely critical. So I think it's something like a relief rally, if I would call it, for the index as a whole. Valuations, again, Neeraj, are very, very attractive for the sector if you compare the long-term means, medians, whatever you want to put through. But again, I think the near-term softness is what has caused havoc onto the stocks. Numbers have proved that. But I think the next few weeks and months, I think, will give opportunities to enter into these stocks with a long-term view.
Okay, that's the view coming in on autos, which so far has been underperforming. And remember, majority of these are also trading at their 52-week low. Let's see if it's just a temporary bounce back, a technical bounce back, or it's here to stay. That Nifty Auto, nevertheless, off the day's low and currently sitting of gains. Hi Mayuresh, good afternoon. Well, the stock which has been in focus today, and that's Zee, which has reacted negatively to the deal. At least two things have been established, that they met the deadline that they had given, so some credibility there. And also, if there is any sort of future stake sale by the promoters, they've fixed a price, floor price of at least 400 rupees. What's disappointed the street? Is it the strategic investor not coming on board, or is it the valuation?
So afternoon, Navneet. So I might be a little bit biased because I continue holding the stock in my funds. But you're right, I think it's a mixture of both these elements. I think what the street might have probably liked might have been a higher price in terms of the investor that they brought through. Yes, I think some amount of credibility was established with the investor coming in. But again, I think in terms of what will actually go through over the next few weeks, before the September 30th deadline, I think, again, I think that creates an overhang onto the stock. So what kind of a valuation are we looking at? Because time and again, if you probably look at the core fundamentals of the business, I think the core fundamentals are just fine. I think the subscription revenue was very good this time around. Ad revenues might have been a little bit on the softer side. But again, I think the new tariff order revisions, the pricing revisions have probably created some impact in the last 2 quarters. ZEE5, their OTT platform, sees continued investments, and that is the way it will continue going forward. But even on the regional genres, I think they are establishing a foothold for themselves, and that again is a huge positive in my opinion. So yes, you're absolutely right. I think 400 has been a sort of a floor price that has got created. Now, what kind of a value that gets ascribed for the core business itself, assuming that the fundamentals are very much in place, would be very interesting to see. So I'm still hopeful, as I've said time and again, that I think the new investor will find a value fundamentally in terms of the business model. And let's see what happens over the next few weeks in terms of what kind of valuations the deal can break through. But till that point of time, again, I think it's a huge overhang in the stock, and rightfully so. I think the volatility might continue. A clear disclaimer again, I think I continue holding the stock in my funds.
Okay, let's get in closing strategies from our experts. We just got a couple of them, but hey, the markets are so volatile that maybe we can get a few more too. Hadrien, to you first, your top closing strategy.
Yeah, I'd go with long on Reliance Industries. As we earlier discussed, I think it has the potential. Given today's move, it can actually rally towards the 1195 or even the 1200 levels. That could be the first resistance level. On the downside, you can keep a strict stop loss of 1165 to 1175 zone.
Okay, Rahul, Mohindar, your top closing strategy.
Well, again, a sell one, and this is going to be on SBI. An observation I made right now was SBI's daily volume on the NSE today seems to be amongst the highest daily volumes it's seen probably in the last 2 months. So very important, we've had a solid drop in price, almost 5% odd, and we've had it with one of the highest volumes in the last 15 or 20 trading sessions. So well above average volumes. So I'm reading this as a clear indication of continued weakness. Keeping a stop loss at 323, I'd be looking at a target of 304 coming on SBI.
Okay, so that's a short call on State Bank of India, which is sitting with cuts of about 4 to 4.5%. Hadrien, we'll let you go on that note. Thanks a lot for joining. The other stock which we've been mentioning, and that's bucking the trend, is Ujjivan Financial. This one comes out with its earnings tomorrow, and it's sitting with gains of almost 9% at day's high. Rahul, I'm going to come back to you for Ujjivan Financial, 9% high. Would you take any fresh bet? If not, if somebody is holding longs here, would you advise them to book profits or carry home the longs?
Well, at this point, if you look at the whole market makeup being a slightly tilted towards the negative side, I think it's a point I'd take profit. Again, look at re-entering lower down. Not that I deny that this is long-term probably a good story to be in, but if you're looking at the immediate term, I'm a bit negative, and keeping that whole backdrop in mind, I think the spillover will come in here too. So at current levels, I'd recommend booking profits.
Okay, if you have long position on Ujjivan, book profits. Just want to shift focus to the FMCG space. And Mayuresh, we had Marico coming out with the numbers, good operating performance, which was expected, volume growth of about 6%. I believe ITC will be coming out with the numbers tomorrow. And yesterday, by the way, we had Tata Global Beverages and Trent, which posted good set of numbers, at least in a weak environment. Both the stocks have been holding about their gains. Any thoughts on any of these stocks? And for the entire space so far, that the earnings we've received, not a major disappointment with regard to volume growth, growth, yet the commentary has been very cautious.
Oh yes, and then that's the way it would be, right, Navneet? Because I think you're not really sure in terms of how the discretionary spending patterns are going to play out over the next few months and quarters. So I think they're not going to be very, very aggressive, all these FMCG stroke staple companies, in terms of their aggressive push through, whether it be new products or even on their ad and promotion spends. So I think there is going to be some amount of curtailment happening on these two big heads going forward. So I think as the volumes have stabilized, which largely seems to be the case, and if there is hope that the monsoons continue the way they are and their expectations of the Kharif output being good, the Rabi harvest being good because of all these factors in terms of the late monsoon actually aiding Rabi sowing. So again, I think a large element of all these factors will hinge in terms of how discretionary spending, specifically in rural areas, will pan out, because rural has outpaced urban consistently for FMCG companies over the past few quarters and years. So that is where the entire recovery probably hinges upon. Having said that, again, I think a lot of SKUs that these companies have probably introduced, going directly into the market chain, cutting down on their supply chain, I think on the direct supply chain, I think that probably is also aiding margins to a certain extent. But these companies need the dual effect of price plus volume leverage playing onto their balance sheet, which clearly is not the case at this point of time. So I think I'm being very, very selective within this entire space itself. From a valuation perspective, it's always traded at a premium, both to its own averages as well as to the index averages as well. But I think there has been some amount of respite in terms of the correction that we've probably seen in the markets. So we continue holding on to stocks like a Tata Global in our funds. Our own belief is that the merger with Tata Chemicals is obviously going to play a huge amount of synergy benefits. And the number itself are not bad at all. So I think the tea business grew reasonably well. I think the overseas operations have held up so far. The branded business had some element of added operational expenses this time round. I think that should hold up going forward as well. So yes, Tata Global Beverages, Dabur is something we continue holding on our portfolios.
Mayuresh, we'll leave it at that, Mayuresh. Thank you so much for taking the time out and being with us today and giving us your thoughts. Rahul, Mohindar, before we start wrapping up, two sets of stocks. One of them is Zee Entertainment, 2 days of fall. What do you see there? And two, the metal names. I reckon they would have corrected today any which ways because of all that happened on the global front as well with commodities. But how do you view Vedanta and JSW Steel? So three stocks, 3 quick responses.
I think let's start with Zee. Very good support for Zee Entertainment at around the 330 level. If you look at all of June, July, it has been an extremely well-respected level, which is why I would caution a trader from selling short on Zee after the whole drop that we've seen. So I think there could be some decent support. I'm not suggesting it's a buy, but at the same time, let it stabilize at this level. It's a very solid level, both on a weekly chart as well as the daily. On JSW and Tata Steel, we continue to be very negative. We are, if there was one sector I'd pick to sell in the number one list, it would be metals. I think across the board, I expect weakness. So JSW is no exception. Target on that, 205 on JSW. So we're still expecting almost a 10% cut. I keep a stop loss of 234 for short positions.
Okay, let's start wrapping up the markets. Rahul, stay on. We'll just take in closing thoughts from you. I'm tempted to say it's looking good because it's looking a lot better than what it was about half an hour ago, to be honest. But 1% lower and sub 11,000 is how we're shutting shop today, or likely to shut shop today. Still about 2 minutes left, so maybe that change could happen. I reckon that we'll shut shop on a closing basis around below 11,000. Nifty Bank, the principal drag, about 1.5% lower. And mind you, the markets are doing this despite Reliance making a bit of a pullback. So that speaks volumes about how the banks have done, how poorly the banks have done. Mid caps and small caps, the mid cap index was down about 1.5%. Maybe got about a bit more. No, actually didn't. So tending to bounce back a little bit. Not bad. Last 2 days, the mid caps have actually outperformed the large caps, which is not a bad sign. Let me talk about the large caps first, though, and what's moving, what's gaining, and what's losing. Very few gainers, but at least very few meaningful gainers. Maruti out there. Autos have actually stood out today, and I'll explain why. Wipro is up 2.5%, Maruti 2%. Reliance Industries, the principal reason why we've done well today, I mean, from the lows of the day. But iShares, Bajaj Auto, Hero MotoCorp, Maruti, tells you that maybe, just maybe, oversold on the charts and a bounce today. Not to say that this is a sustainable bounce, but a bounce nevertheless. What's not doing well? Metals. Vedanta, JSW Steel, Hindalco down. Zee down. Tata Motors is an exception of sorts to the autos rule, down about 4%. Bharti is corrected again. Indiabulls Housing is corrected again. I told you metals have done well, so Tata Steel also joins in the party on the downside. And Infosys has corrected 2.5%. From amongst the stocks which would be top contributors by weight on the downside, Infosys would be right up there, maybe just next to State Bank of India. So the large caps poor, mid caps maybe a whiff better than large caps, but clearly a lot of stocks falling 10, 12, 15%. Navneet.
That's right, Neeraj. So the market breadth was still negative if you look at the entire listed universe on National Stock Exchange. I'll still start off with a couple of gainers from today's trade, and we've been highlighting how Jeevan Financial is bucking the trend in a falling market. This one comes out with the numbers, and technically it moved above its 200-day moving average, also closing around the day's high mark with gains of closer to 9%. From the pharma pack, we've seen some stocks doing well in the last few days. So today was the day for Ajanta Pharma. The stock was up. Okay, it's closing almost a day's high. Good gains seen for this one as well. 8% high for Ajanta Pharma. And reacting positively to the numbers was Tata Global Beverages, which managed to maintain its operating performance. The margins were intact, though there was a slowdown clearly visible because the growth on the top line and bottom line was restricted. Tata Global closing with gains of 3%. And you also had Trent, which saw positive reaction to its numbers. That's closing with gains of about closer to 6%. And of course, not to forget Voltas, which has been witnessing long positions in the last 2 days. This one's closing at day's high with gains of 5%, comes out with its earnings next week, but there's definitely some buying which is taking place in this stock for the last 2 days. On the losing side, well, Coffee Day Enterprises and Sickle Logistics continue to be locked in lower circuit for the third straight day today, and the circuit limit revised from 20 to 10%. And the other stock which was locked in lower circuit was Care Rating. This was down about 20% in today's trade, as you can see, closing at 604. Other stocks which were in focus was the likes of Dish TV on back of the deal coming out finally yesterday post-market hours, where Zee Promoters will be selling 11% stakes, 6% lower for Dish TV. And the metal stocks were weak. So Jindal Steel and Power from the steel pack was down almost 4.5%. And Spencer's touched its 52-week low. That stock also saw some selling pressure, down almost 10%. And from the pharma pack, you had Aurobindo Pharma, which saw selling pressure in today's trade. That was down about closer to 3 to 3.5%. But overall, if you look at the market closing today, Bank Nifty did breach the 200-day moving average. I believe the closing, however, is coming above that mark. And Nifty also very close, Neeraj, to that 10,011. So it was a recovery of almost 100 to 110 points from the low point for Nifty.
What led the recovery? Let's get the contributors list first then today. Reliance predominantly up about 16 points. Maruti Suzuki, well, that too actually moved up 2% in the last 45 minutes, 1 hour of trade. So, but you have to say it's predominantly Reliance which actually led to this. Otherwise, the others are, well, single-digit contributors. But very interesting, actually. I thought that Infosys would be next to SBI. It's not. It's the principal contributor because of the weightage that it has.
That's right. And let's also look at the market breadth, how that panned out today. Though, of course, we know it's going to be in favor of the declines. But clearly, there were more and more declines. And this is for the second straight session that we're witnessing, that the broader market trend is on the market breadth continues to deteriorate. But interestingly, I think we'll be watching out for the internals, market internals in the form of FI and DI data. Having said that, the participation today being the weekly options expiry day, NSE F&O turnover is definitely on the higher side, considering it is a weekly expiry. We usually see the figure between 20 to 22. And for NSE cash, yesterday it was 36. Today it's about 33,327 crores.
I suspect this would be amongst the highest expiry day F&O volumes that I've seen.
It looks like to me, I don't have the exact figure, but definitely it's on the higher side for a weekly options expiry day.
Yeah, it is definitely high. But, well, interesting afternoon of trade. Let's see what the next day brings in store. Rahul, Mohindar, if you were to leave us with one key advice based on what you've seen in the last few days, what would that be?
I think, Neeraj, a couple of things here. We are still negative on that index. So if you're index focused, the move is still down. I'm really not going to change tack unless 11,100 or 200 starts getting taken out. We need to get above those levels again. We need to close above them. A lot of work has to be done. And if you look at the individual stock setup amongst your 10 heavyweights, as I was mentioning, they still seem to be negative. Metals being a very weak pack, banking continuing to be very weak. However, now if you're looking at an investor profile and your stock specific, you don't need to worry so much. Just to share some ideas, there are a lot of stocks in my buy list as well. Let's look at something like a Power Grid or an IGL or an Asian Paints, a CESC, a Voltas, Tata Global for that matter. All of these stocks are very healthy technically, both on a short-term to a long-term count. So it's a very stock-specific market. It really matters as to what you're holding, what you want to buy. But if you are just going to be buying the heavyweight Nifty stocks or the heavyweight Bank Nifty stocks, I think that's where I would exercise caution and wait for things to pan out a little more. I'm worried seeing such high volumes on something like an SBI today. I'm worried seeing the breakdown on the way Tata Motors has broken down, the way Tata Steel is broken down. The whole structure looks a little negative to me at this point from a heavyweight perspective. Even in Reliance, we've seen this rally up. Maybe we'll throttle through another 30, 40 odd rupees, but the real challenge is, will we get above the 200-day moving average? Will we get above key resistances of 1220, 1230? So the idea is, let's not look at this from the next 5% perspective, but probably something bigger. And I think I won't rush to believe that we bottomed out right away.
Well, that's an advice to definitely watch out for. Rahul, Mohindar, as always, really appreciate your time, more so on a day like this. I know it would have been a busy afternoon, but appreciate you spending the time and joining us today on Bloomberg Quint. Well, that's the view from Rahul Mohindar of Viratech India. It's not been a great day of trade. Let's see what tomorrow throws up. The world markets are positive, which is actually not a bad sign.
It's a better end to the week tomorrow.
Yeah, cross fingers for that. But from Navneet and me and the entire team that put this show together, thanks so much for watching.